Hi everyone, let's cover 3 Elliott wave scenarios of importance in this range and then cover the probabilities. Starting with the first scenario where we are looking for a bigger zigzag ABC and then continuation to the upside. In this scenario, we have an impulsive structure in a wave A, 3 wave in B, and now want to see another 5 wave impulsive structure to the downside in a wave C. The most common target for your wave C is between the 1 and the 1.236, a trend-based fib extension taken from the start to the end of A to the end of wave B, giving you a target area between 89.6K and 87.4K. As you can see, it's nicely in confluence with 2 of the additional support boxes for some extra confluence, which is box number 1, 89.4 to 90K, and then a box number 2 here, 86.9K to 87.4K. Now, what you want to see in this scenario is a very impulsive wave 3 to the downside. So you don't want price to range sideways too long and all of that stuff. You want a high amount of volume and a quick structure to the downside. You can also see that we have another blue box over here, and that one is actually important to distinguish between this scenario here and the other 2 that I have in my folders. This one is between 93.3K and 93.9K, and if price can lose this level here, then the probabilities really increase for a zigzag and price to move down below the low here at 90.6K. Now, the reason that that blue box is so interesting, this one over here, is because of the 2 other scenarios. And the first one here is a flat. So in this scenario, we then have a 3-wave structure to the downside in a wave A. And then we have a double zigzag. W is finished, looking for X. And then a 3-wave structure to the upside in a wave Y, which then is a subcount of the bigger blue B. Because we are looking for a 3-wave A, 3-wave B, 5-wave C to move below 90.6K in this particular scenario, and wave B is most commonly a zigzag family structure. And here we then have ABCW, 3-wave X, and then an ABC again to the upside in a wave Y. Now, your common target for your B here is between the 1.38 and the 1.236 Fibonacci, taken from the start to the end of A, 103.4K to 102K, and then you want to see wave C down. Now, for your wave X, it was very important to move into the fibs over here. So these fibs are taken from the low to the high of W. You can see that this low here missed out on touching the 382, which generally is a minimum target for a wave X. So it's nice to see this drop to the downside. It's actually something you want to see in this particular scenario. And the most common retracement target in general is the 05 to the 786 area, which, guess what, also houses the blue support box here that I just mentioned. Now, of course, what we are then looking for in a wave X is a 3-wave structure, an ABC to the downside, find support, and then move back up. And the difference with a zigzag is that now you don't want a straight line down. You want price to actually form a couple of wave 4s and a bit of sideways price action, basically something you had over here, right? Not just touching support, bounce, and then fill to hold, retest, and then move to the downside. You actually want this type of a price action over here when hitting support, then look for signs of strength. That would be ideal in this particular scenario. You want price to hold over here, price to range, and then eventually market structure back towards the upside. Now, in the final scenario, which is more like a bonus because it's kind of too early to still talk about triangles, to be honest, generally you want to wait for wave D to be in. And we're only working on a wave C in this case, but it's still like interesting. It's possible. ABC to the downside in A, in B, you then look for C, and there we go again, right? Important support. Then we have a D, and then we have eventually our wave E, and you look for price to move to the upside. Now, this is then, of course, a bigger sideways ranging structure, but you can see that all of the scenarios are corrective structures. We have a zigzag, a flat, and then a triangle. None of them are actually very bullish, counting this as the end of a corrective structure, and then a 1, 2, 1, 2, and all of that stuff at the moment, right? So we are looking for an extension of the range, which is something that we do like to see on the daily time frame as well as on a daily. We're looking for wave 4 and then still wave 5. I will cover that again in the live stream later today. But here in the triangle, This support is also important because the invalidation for a wave C in a triangle is moving below your wave A. If price is losing this support here, the probabilities increase to take out the low, and that is of course not what you want to see in this particular scenario. So basically in 2 of the 3 scenarios, this support here will play an important role, and how we approach this level of support will have an impact on the probabilities of these scenarios. Now, if I then look at the CVD divergences, then we actually had great CVD divergences. So price, remember on Friday, right? Price moved to the upside in a nice 3-wave structure. Right? Remember the video that we did, the more complex one. We moved up in a nice 3-wave structure to the upside, zigzag structure. We touched the resistance, which was the point of control of this range. We formed a local 5 and 50-minute bearish CVDs, move down, 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 bit back up, more bearish CVDs while testing resistance for the second time. Now this for me was overnight over here, so I wasn't awake, but when I woke up, I saw the bearish CVD here. That's exactly what you want to see when you hit resistance, you get a rejection, you see bearish CVDs building, right? That's nice. And then price moves down, and then you get some additional bearish CVDs. And that, of course, is very, very interesting. You have the bigger one, and then you get another smaller one to almost like confirm the bigger bearish CVDs. And what it means is that there is absorption here of market longs with bigger limit short options, dragging price towards the downside once the buyers are exhausted. So very, very interesting. Keep an eye on the CVDs as price is moving down. At the moment, there's not much happening here. It's, there's not really any range and stuff, but keep an eye on the CVD divergence. And if we then look at the news, you can see that on Monday, Tuesday, Wednesday, and Friday, we have some high impact news. Today, Monday, December 2nd, at 4 p.m. Central European time, we have some high impact news. So make sure you trade safe. It can increase the volatility on the chart. And if we then look at the probabilities of the different scenarios, then at the moment, locally, price is moving to the downside, and we have a bit of volume coming in as well. So first of all, for a bigger flat or a triangle, price has to stabilize and find support, and preferably not move below this blue box over here. So I keep an eye on the area shown in the photo, primarily for the flat and the triangle, this blue box over here, and I pretty much take it from there, because if we are looking for a flat in an A, B, C, or the triangle, then what we want to see locally here on the lower time frame is price to start moving a bit more sideways and create a couple of 4-5s like we had over here. You want to reduce the speed of price falling to the downside, then get support on the blue box, and then eventually look for signs of strength, whatever that is for you. Market structure change, CVD, RSI, MACD, money flow indicator, doesn't really matter. Candlestick patterns, right? Anything that will then get you confidence for price to move towards the upside. But at the moment here, price is just falling. We don't really have ranges yet, so that would be something to at least keep your eye open for. Now, in all scenarios, I would personally enjoy seeing price move down to my blue box support, which is important for the flat and the triangle, right? This one over here. And if you fail to hold the support between 93.9K and 93.3K, then I would pretty much look for the zigzag in the A, B, and then a bigger C to the downside to move below this low over here. Also keep an eye on how quick we move to the downside here. If this is a wave 3 of the bigger zigzag, right? A, B, and then 1, 2, 3, 4, 5 in the bigger zigzag. You want to have a steep wave 3, right? Should be a quick move, high amount of volume, lose support, right? You don't want too many long and sideways ranges as price is falling. While in a wave C, we do want price to slow down as it approaches support as explained, right? So that is something that I'll be looking for, but I would like price to move down to support and then take it from there. I hope this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.